It's Wednesday. It's NVDA earnings tonight. Right now the stock is basically perfectly unch. Maybe there's a little tension in markets. We got a great show coming up. We got a really interesting show. This might be the most diverse show yet we've had. There's a lot of variance in today's show, including a conversation about variance itself as an asset class. I'm going to be joined at the top, of course, by Brent, Kochuba of SpotGamma as we go through today's session, doing a little trade management, getting ready for the action tonight. Everything we're thinking about today has a strong tech bias to it. Pete Najarian's got some unusual options activity in semiconductors. We're going to take a look at what Kalshi's got for NVIDIA earnings, the words people are looking to be used in the report this afternoon. We're going to talk about variance futures, a new way to think about volatility, a product special here to the SIBO, and a specialist, Noel Smith, joining me from Convex Asset Management. Here live from Vegas, usually. I'm excited to be joined by him in person. We're going to be taking a look around the world and thinking about AI as a way to pick stocks with Jason Hsu, wicked smart guy from Rayliant Global Advisors, joining us from the ETF side. And then we're going to have a conversation, I think, that's going to be particularly fascinating from someone you probably haven't heard of, but is a huge voice within the banking community, and that's Bart Smith of Performance Trust. Chicago-based, but someone who has seen a real national perspective on regulations in banks, and he's got some real interesting thoughts on stablecoins. So we're going to drift into the crypto world a little bit today as well. Then Scott Bauer joins me at the end of the show as we go through the risk radar, talk about some of the shifts that we made yesterday, keeping an eye on the dollar, basically unch again today, keeping an eye on coins, BTC, solid session, firming up about 80 bips right now. MicroStrategy was down earlier in the day, but it came back. Let's go to Brent. Let's look at the S&P 500. Firstly, right now, SPX is 6482. Brent, this is a session so far that seems pretty solid, if not a bit quiet, considering the big stuff that's going on here this afternoon. And by the way, for those tuning in, got a little QR code there, a freebie from you guys at SpotGamma. Thanks for including that for our viewers. Your guys' flow report is really good and your newsletter is really good, so scan that if you want to take a look at it. What's going on, Brent?
Yeah, thanks so much for the opportunity. You mentioned unusual options flows, and so we use proprietary buy-side positioning to flag unusual flows, so scan that QR code, and we appreciate that. As far as the market goes today, all eyes on NVIDIA. Everyone knows that story. The interesting thing, if you look at S&P vol, tomorrow the market's pricing in a 1% move. This is the S&P is pricing in a 1% move. It's unprecedented to have such a big volatility leap or expectation volatility for a single stock to report earnings, right? So 7 to 8% of the S&P, as we mentioned yesterday, is NVIDIA. 14 to 15% of the NASDAQ 100 is weighted to NVIDIA. So this is almost like the indexes themselves are reporting earnings. And so if you look at positioning, what you see, interestingly, in NVIDIA is there's a lot of short calls above. So what's happening now as NVIDIA gets to be such a big component of the S&P 500, it's bringing in funds that want to sell calls against that core holding. And so why I think that is significant is the implied move for NVIDIA is about 5% right now. I think that's pretty reasonable. I'm not expecting that to be really beat to the upside because of all this options positioning that could really squash that upside volatility.
That's not that big of a move. 5% is, it feels like this trade has maybe not cooled off because that seems to have a little bias towards it, but it's calmed, I would say.
100%. I totally agree with you. Last year at this time, a year ago, people could not buy enough long NVIDIA calls. You remember that NVIDIA was going up at like 5% a day, right? It was just going bananas. And so the stock has really matured now that it is the largest stock in the index. And there is so much of this call overriding to bringing more yield that I think could, again, lead that stock to have pretty muted upside. Now, the soft spot is to the downside. If you look at the dealer positioning, you see that there are some long put positions. And I think if the stock misses or if the earnings report is not well received by the street, you're looking at 165 as first support. So that's a pretty solid 9 to 10% move to the downside. And that would also have a ricochet effect into the equity indices due to that heavy weighting, right? And there's so many other semi-stocks, et cetera, that could have a lot of weakness here. So the market is not pricing in really any material downside, but I do think that is the soft spot.
I'm going into your platform here. Just going straight to the options volume for NVIDIA today. 2.3 mil, currently bigger than Q's, bigger than Tesla. So even if the implied move is not big, to your point, there's still weight behind this. And also, to your point, the weighting and the percent representation across the index and the sectors. So, I mean, it's still, this is a beast. And I feel that, in my opinion, I think it outweighs the Fed convo. And I feel like the market maybe has started to kind of lean my way too, since we've been chopping after a generally dovish Powell.
I think you're right about that. And the NVIDIA unlocks the AI growth story, of course, and there's so much of a narrative constructed around, just semiconductors as, kind of our core growth story. And I think how can you solve all problems in the US economy? Well, with economic growth. And there's no bigger growth story, obviously, than the CapEx spend with all these top kind of Mag 7 companies. So it's critical. And you can tell in the implied volatility pricing in the S&P how important it is. Now, what's also initially or very interesting about this is if Oliver, you go to the vol dashboard, which is the second link down, it looks like a little histogram. Second one,
Yep.
There you go.
Got it.
I want to show you the implied move for tomorrow. So go to your top right there, the 3-bar icon. Click that, and then just remove the compare mode. Just uncheck that. I want to show you the at-the-money implied vols, because I want to say that what I'm saying here is data-driven, right? So the implied move for the at-the-money options, which is under 64.80, that's the at-the-money option. So you can see tomorrow's implied move exactly is 16%. That's a 1% move for tomorrow. Market similarly is pricing about a 1% move for Friday, the next day down. But then we immediately go to Labor Day weekend. Look at the at-the-money implied vol for next week.
It drops significantly.
Significantly. So people are hedging the risk of NVIDIA missing. And as long as NVIDIA doesn't miss, then the bull train just fires right up and we just grind ahead. So this thing just unlocks what I would call the zombie market, which is, I bet you the VIX goes down to 13, realized vol just contracts, and we just sort of grind higher.
The NVIDIA gravy train, basically. Brent,
exactly right.
What did this look like before Powell? Because I feel that my opinion that NVIDIA outranks Powell is totally validated by what you were pointing out here.
For vol points higher for next week for this post-Labor Day period, right? So you definitely got vol contraction after Powell. Was sort of like, okay, rate cut, fine. And if you look at rates and the estimated cut and all that, everything just came out in line. So Powell took the risk off the table, right? And that allowed vol to contract a bit. And all we need here is NVIDIA just to say, okay, everything is status quo or even a little bit better than you think. And then you're going to start to see not only the indices start to move up, I think match the all-time highs, but then you're going to see, I think, a big reach in the meme stocks, right? The names that people love to grab for, like American Eagle is a funny one at the moment. Semi stocks, smaller cap semi stocks. We've seen a lot of unusual flows in some software names. GTLB is one that came up for us here. So people will start grabbing and reaching for those returns. And then the next risk window will be September OPEX, which aligns exactly with FOMC. VIX expiration on the 17th. So, that we have just this period of status quo, right? If we can clear NVIDIA earnings.
Okay. To come back into the platform, one last thing here, just to go through the session. We just took a little bit of a hit there. Down to 64, kind of mid 70s now. You can hear the guys behind me getting a little bit worked up. We talked about 64 a lot as kind of being the trap door below. If we slip below that, and to connect this to the runaway train, if NVIDIA is okay and vol compresses, where is that all clear level, in your opinion, to the upside?
Yeah, so just go up to that heat map zoom and bring it all the way to the left.
Okay.
So you're going to zoom all the way out
on around what, 65.80?
Yeah, so there's negative gamma up there, but the level I want to show, and at the top left, the 0DT button there, Oliver, please uncheck that one.
Okay.
So we're looking at all positions now from all expirations, and the thing that is most interesting to me at this moment is you got the JP Morgan strike, which will show up there at 65.05. That's obviously the first target. That's going to be a huge level.
Right there,
that's it right there. That's going to be a huge level into options expiration in September. So that's going to be a base of support, right? And I think once we get over that, what you're going to see is traders persistently selling calls. This is the kind of Vanna tailwind that is often talked about as implied volatility contracts, and we're just going to grind up. And I think we'll start, moving towards that 6,600 number, 6,550 number for sure. Nasdaq is about a percent and a half of all-time highs. Same thing with IWMs and the small cap. So I think we really quickly move to those double top numbers with decent earnings. And then to the downside, what you can see there is they're small, but there's little red bars all the way down below your cursor. Those are some very small, but those could increase under 6,400. Those are long put positions. So there is a slight amount of hedging, right? And what you see is
sleepy bears down there.
Yeah, when you get under that 6,400 level, we start to lose a lot of the implied support in the market. And I think that if we break 6,400, that we could get down in the 6,100s pretty quickly based on this positioning, right? Because the only material positions down there, so the dealer here is short these puts, and that could add to a lot of downside hedging flow. So as long as we maintain that 6,500 level, that JP Morgan call that expires at the end of September again is a big stabilizer that's supportive for the market. And then the farther you get away from that area, when you get under 6,400 in particular, things could get a little squirrely.
All right. This has been quite a back and forth. It feels like we've got to get some release, right? That's kind of where I'm at. There was a few kind of around the edges things, whether it was crypto on Monday that looked like maybe it was going to break a little bit. If it was some of the stronger trades that started to move higher. I was looking at yesterday Wynn Resorts or on Monday, actually, and some of the kind of stocks a little more on the international side that are ramping up. Generally, the tech stuff looks solid, but we're pinned. I mean, to your point, we could see it on that chart. There's a little bit of it on both sides, but it really looks like NVIDIA here is the release valve, as I feel like it should be. This is really what drives it: AI, the tech, the underpinning. We're going to see that there's bets on Kalshi about this stuff right now, about what words they're going to use. It's amazing, by the way, that what are we at now? 2 years of this, that this is still such an incredibly dominant force for the market, this single stock that's been keeping us in this range.
100%. And, it is by far the biggest stock now in the indices. And it is the growth story, right? It represents that whole narrative. And so it's really quite important. And I would just leave you this last thing, if you scan that QR code and get the flow report, gold is one that continues to get big positioning. In fact, our Flow Patrol report that we put out this morning showed really some big deltas coming into gold. So, there are some of these other assets that are starting to continue to gain traction. Bitcoin getting a little bit weak. Gold staying strong through all of this and appears to be continuing to attract more flow. So, there are some non-equity moves out there that I think are material and should remain on people's radars.
Hey, gold's a rock. No, seriously, it's great. The thing is, it just works no matter what. All right, great stuff, Brent. I'm getting pretty quick on the SpotGamma. I'm loving the platform, by the way.
Thank you so much. I appreciate that.
Yeah, for sure. It's pretty intuitive once you get to know where you're looking. Brent Kochuba, founder at SpotGamma. Let's keep talking some volatility, variance, and more. Joining me here at SIBO is Mr. Noel Smith of Convex Asset Management, Vegas-based, here in Chicago. You just did an interview here where SIBO's going to come out about variance futures. Noel, you are a vol expert, and this is also a home to you as well. We talked about this a little bit when you came on my last podcast at my old show, or when we were doing hits, which was about what you do at Convex. But I mean, this is where you started as a prop trader. Maybe not this floor exactly, but this is your kind of home court.
Yeah. So I was a market maker for a long time, and it's this is my first day on this new SIBO floor, and it's cool. It's familiar and home, but not anymore.
Right. What's the biggest thing that stands out as different to you?
It's quiet. And there's a lot.
We're also range bound right now.
Yes, but so the old floor was 4,000 people, 5,000 people. I don't know exactly, and this is 300, 400, 500 something. Yeah. So it's a lot smaller and it's a lot less rowdy.
Right. There's a lot of I think wrangling of the machines happening too, but also making sure that there's a shorter line of communication between people, finding whatever marginal edge it is. If there's somebody that can be paired feet away from someone to get that quick hand signal, it's amazing to me that no matter how much markets have developed, there still is some use for a human.
Oh yeah.
And this is what you do too, because you've got multiple strategies that you put together into an offering for investors that is ultimately about finding edge in markets.
Absolutely.
Tell me about what you're doing right now.
So the point of our hedge fund is really just to take the ideas from this city and take prop strategies that people know and assemble them into an investable product for our investors. So we're trying to take unique ideas and the things that all of the firms that most investors have heard of but don't ever get access to, and put them into a single bucket and say, okay, yeah, this is alpha that we can use and make money for our investors. And we use volatility as a large component of our alpha.
You like volatility as an asset class, but now there's also another extension of this, which is variance as an asset class. I think this is really interesting. There are variance futures now which you can trade. Tell me about how you're using those and what value they provide.
So variance and volatility are very linked. They're basically just solving for a different variable in an algebra equation. And when you're trading something like VIX or SPX options, you're looking at implied volatilities at some point in the future. One of the reasons to trade volatility as opposed to stocks, or say you have just the stock price, right? SPY. And it goes up, you make a buck, it goes down, you lose a buck. But in volatility terms, you're predicting the future. It's a future prediction of what things are going to be as opposed to what is right now. And variance is different because instead of having a future prediction, it is saying what is today, or what is today as a function of going back in time. So the variance futures product is something that SIBO developed, and I think it's a unique new thing to add to the toolbox to get accuracy in your volatility predictions.
Now, is it like an additional part of the spectrum of volatility, or do you view it as like another derivative of volatility? What's the input? What's the output? Like when we think about, like people have quick ways to think about vol, where okay, a 16 VIX means a certain move in S&Ps. What's kind of the back of hand math for us to understand how variance correlates to volatility?
Sure. So if you just Google the formula for volatility versus variance, you'll see that variance is just volatility squared.
Okay.
So if you take a volatility, call it 20, let's just make quick and easy math. 20 and you square it, you have 400.
Okay.
And if you take 30 and you square it, you have 900.
900.
Right, exactly. So if you look at a variance future, you'll see a price of, say, 400. Like I bought variance futures a couple days ago, and they were 330. So that implies some volatility less than 20. Okay, probably something more like 15. So all we're really doing is we're solving in a different dimension. But the difference is that if you are trading VIX and you need to say to hedge, what happens is the marketplace is still predicting forward VIX as being something that might mean revert, right? And they might smash it. So you have a bunch of VIX on, you make money because volatility goes up, the stock market goes down. But if you don't hedge it right away and accurately, then you kind of miss the event. Versus in variance, what
less
will happen,
timing element to it for variance?
less of a timing element,
Right.
yes. So it becomes a little cleaner hedge, and it's also more convex because it is a squared function. It is not a linear function. It is more convex to it.
Does that mean it can go from cheap to valuable pretty quickly?
It can go from, it's funny because it's not linear. So in other words, if you go from vol 10 to vol 11, it's not that big of a move. But if you go from vol 50 to 51, even though it's still, those are both one,
Right.
it's a much larger percent.
Yeah.
Exactly.
Yeah.
So you have to kind of know the product and learn it a little bit, but it can add a totally unique dimension to it. And also in one of our trades, which is a dispersion trade, you can get away from strike specificity. So if you are trading options at the money options in SPX, you can get away from strike, and then your options become less useful, right? If you're trading 50 delta options, well, it's 50 delta at 6,000. It's not going to be 50 delta at 5,000 or 4,000 or 10,000. In variance space, it doesn't matter. That dimension has been totally taken out of the equation. So what you can do is you can trade short vol and collect realized variance no matter where the actual number of the SPX is.
Okay. I'm doing a little math here to kind of put into some numbers what you just described there about the variance of or the convexity of variance, which is I think is a pretty interesting way to do it. Because if you said 51, the move from 50 to 51, basically, right?
It sounds like one, but it's not.
Right. But the difference is that it becomes a pretty big spread because you've got 50 times 50 versus 51 times 51.
Right.
So that becomes a pretty quick move. That one, when you're already at 50,
exactly
multiplies out a lot. So can it be used as a higher probability way to hedge then that is less timing sensitive?
No.
Or is it more about the bigger payout if you do get the timing right?
It's a bigger payout if you get the timing right and you're long it.
Okay.
Obviously, if you short it, it cuts both ways.
Right. Other way.
So I don't think there's any inherent edge in trading any product over another product. It's just a thing, right? It's a widget you put into the toolbox. But what can be done is you can trade it in a way that you add what actually has happened as opposed to the market's future prediction of what will happen. That's the biggest difference.
Nice. All right. Well, you just did another explainer for SIBO that's going to be coming out for them soon. Love that you gave us one here as well, and a nice rundown through the numbers. Appreciate it. No, good stuff.
Thanks for having me.
Great addition to the conversation here.
Cool.
As always, Noel Smith, Convex Asset Management. I'll be seeing you in Vegas.
I think so.
Look for Noel when we're at Hood Summit. Appreciate it. Great stuff. Though we're gonna educate people on this stuff because it sounds complicated, but it's all about bang for your buck.
Yep.
Which is also what our next block is about as well. Thank you, Noel Smith. Switching gears. Let's go to the gamble. All right, Mr. Pete Najarian, good to see you, sir. How are you on NVIDIA Day?
I am doing fantastic. I love it. You guys, I'm very intrigued by the conversation. It's great.
Thanks, man. We're bouncing around from trying to stay on top of the hot products, trying to figure out whatever new ways there are to get some edge. That's like what it's about here. It's trying to find every little marginal difference.
Yeah, and I love that you're right there on the trading floor. I really do. It's great. I miss it, but there are things that I don't miss as well. So,
what I love is hearing the market. Hearing the market is so nice.
It is.
Because it's like I don't have to look down at my platform. I can hear if something's interesting. It takes a tick down.
Right.
Tell me what's interesting, what's crossing your radar. You're watching Unusual Options. I saw you guys put something out earlier about the semis, which is obviously right in our target here today.
Yeah, absolutely. And that's been a hot area for a long time. You know that. I mean, whether it be even more obscure names like a Lam Research that nobody ever really talks that name much at all. And yet, if you take a look year to date, how have they done versus NVIDIA? Well, they're doing a lot better. So we got NVIDIA tonight. That is the biggie. And that's what everybody's talking about. Everybody's looking. As a matter of fact, I just took a look. I think they've already traded 2.3 million contracts.
That's what we were looking at. Monster. It's bigger than I think it was bigger than the Qs today on SpotGamma.
Yep. And about 1.4 million of that is on the call side. That doesn't mean they're buying every one of those as a buy, but I'm just saying that there's definitely a tilt towards the calls versus the puts today, but that's pretty normal. But going into this number, and obviously earnings season, this is kind of where we really start to lighten up, except for NVIDIA. This is going to be a massive report that everybody, of course, is still sitting in front of and watching it. And, I still got to give the credit to the CEO, the way he pivoted from gaming over to the data centers and the AI and all the rest of that, which is now 88% of their business. You just got to love the way they did that, how they accomplished that. Even if they've got to give 15% to the U.S. government, I think they're pretty happy.
Yeah. You guys saw something that was in Intel too. Do you think is it just those are the two big stories right now, NVIDIA, and for totally different reasons, right? But ironically, It seems like Intel with the wild U.S. government investment, and now becoming kind of like this cultural, firebrand story.
Yeah. Well, it is interesting, right? I mean, it seems a little bit different because of the fact that it's public-private, that whole thing. I think it's something not everybody likes what's going on there. But I think some of the reasons that they use for national security and so forth, I think that's pretty daggone important. So, you can twist it either way. But in any case, $9 billion investment and having about a 10% stake, that's a major deal, I think, for the U.S. government to be able to do that. And can Intel actually be one of these stocks that actually can start making something to the upside and hold on to it into the future? I think the answer is potentially yes. But in the meantime, there is still a lot going on, as you know better than anybody. But the semiconductor world is on fire right now. And whether it be an AMD or a Lam Research or an NVIDIA tonight and everything, that is the focus that everybody's got. And the influence. I mean, shoot, NVIDIA is 12% of the S&P 500. So, This is the big daddy of them all, right?
Yeah. There's some interesting stuff happening in the contracts market as well. If we go into Kalshi here, it's pretty I don't know. I feel like they're selling dollars for 89 cents here on questioning if they're going to mention Hopper on the call. Have we already moved past Hopper so quickly that there's an 11% chance they may not? 1 out of 10? I mean, isn't that still a really important part of this business line?
Oh, absolutely it is. But, everybody's going to tear it apart how they tear it apart and what they're really truly looking for. I think that the reality is with NVIDIA, we have seen multiple monstrous trades coming in there over the last, let's call it a little less than a week, really, where they're going all the way out to December with one of them, buying a huge spread out there, and then coming a lot closer into an expiration on Friday, where they're actually attacking almost right where we are. They're going after the 187.5 calls and selling against the 202.5 strike calls. And some of these trades are massive. Some are 30,000 lot trades. I mean, those are big trades, people putting in money for where they think that this is going to end up by the time, at least in the front month, they're looking for that. And then obviously going all the way out into December, that's a major hit that they've got out there. But it's a 290 spread, so a $90 spread that goes out there that costs a lot of money when you start looking at the theta, the time premium that you've got to pay. They're also taking some of that away by selling some of the downside puts. So overly complicated, not really, but a little bit more complicated as far as a spread. Yeah, absolutely.
Okay, so what's that? Is that something then that looks low probability but high payout? What's your thought? Is that something you want to jump in on, or is
to answer your question, I'm going to jump right now. I like both. I love the fact of the December trade. I think that there's a lot going on in terms of the potential for NVIDIA as we get into, I've been saying this for a while, second half of the year. That's where we really wanted to see what things were going to be happening. Well, we're pretty daggone close to that, right? Yeah. So I'm looking at that, and I'm still pretty excited about what we see going on there. And they're going out into December. That's going to cover quite a few different pieces of this puzzle that goes together when you talk about NVIDIA. And I'm excited for what we're seeing, quite honestly, Oliver. I like what we see in the front month, too, because oftentimes in NVIDIA, they go a little bit further out. This time they went right at these 29th expiring calls here in August. So are they going right after it, thinking there's something bullish there? It sure looks that way with the numbers that we're seeing.
Kind of echoes what we were looking at with Brent too, which is the broader market implied vol and what next week looks like, assuming things go smooth. It seems like there's this big breath of relief that might happen, and you could have a big drop in vol if things go well today. That kind of seems maybe the same notion of some of that short-term action getting pushed up that you're looking at.
I just wonder how much further down we can go. I mean, here we are basically, and it's been a very tight range for a while now. When we got up and over 20, a lot of people were pretty nervous. We didn't stay there for any time frame hardly at all. Yes, we closed over 20, but then the next thing you know, we're back into the teens. We're into the 17s and the 18s, dropping all the way down, and now we've been stuck in this very tight area for at least a few trading sessions, 14s and 15s. So, we've got... Yeah, and we've gotten through a lot of the headaches that we've got and some of the issues, and obviously tariffs are still an issue, but it seems like we're navigating through that very well. Just look at the beats in the earnings this quarter. Absolutely just astounding, especially if you listen to too many people on TV who tell you how bad things are. They're not quite as bad as what everybody says on TV, are they? It seems to me, and we're seeing that with the data
down here. I can barely get a seat for lunch in the Gold Coast at 3:30 p.m. yesterday. It's like, doesn't seem like.
Don't even try to go to the bars.
So Pete, basically, if they don't bomb tonight, it seems like we could be looking for vol crush. We could be looking for short-term upside to get paid off for NVIDIA. Now, if, of course, this goes the other way, do you think that hits the fan? Or will market find comfort that, Powell will have a put somewhere down there?
Well, it certainly will determine on why it gets hit, if it gets hit. What's the rationale? What was the reasoning behind that? They give us some sort of a picture of that, because certainly if the guidance isn't there, they're going to hit the stock. I don't care what numbers they put up. If the guidance isn't there, they're going to sell the stock off. But I don't expect that. That's for sure. And it's not like I come in as a raging bull. I just look at the numbers, look at what's going on with the AI and all these data centers and all the requirements that are out there, and people are just wanting to be there, right? Everybody wants to be in that space right now. So it seems to me the demand is still there. It's been going on for a while, but I think it can continue a little bit longer. So with that in mind, I think that there's a lot of reasons to be pretty bullish. Now, if it did come down, I think that would create some opportunities around the markets, because it depends what gets pulled down with it. But I've been loving the financials since the beginning of the year. I continue to love these financials. And look at the deals. Look at the IPOs, but also look at all the big deals that have been going on this year. Yeah. Anybody who's in the investment bank industry right now is absolutely crushing it. From Bank of America, Goldman Sachs, to Morgan Stanley. I mean, you go through the whole list. It's absolutely extraordinary. And we see another deal, it seems like, every single day. It's just been incredible.
Nice little tease because we got a bank expert coming on, a little bit of a different angle. We're going to be talking some stable coins. Pete, like the trades, like the eyes on NVIDIA. Appreciate it, sir.
Appreciate it, Oliver. See you next time, man.
You got it. All right, we're going to take a short break, come back. We're going to talk about international investing and using AI to pick some stocks. The very smart Jason Hsu of Rayliant Global Advisors up next.
There are two things about Chicago finance you can't get anywhere else. The first is kind of hard to miss. Everyone's trading options. SIBO is on a 5-year growth streak making billions, and its goddess of grain sits atop the final pit of open outcry. And that's what it's all about. The chance to fend for yourself. A fortress for the self-made trader, and the only still standing in America. The second thing you may not know, but it's worth trillions. Chicago is the only major city in America that's home to 2 of the top 10 registered investment advisors, according to Barron's. That means a steady river of passive money and fixed income pouring into the city. If you think you can beat the market, this is where you do it. If you've got value, price will discover you here in Chicago, the future of finance.
Join me, Oliver Rennick, from SIBO, Tuesday, Wednesday, Thursday, into the closing bell, live from Chicago.
Welcome back to Chicago, Future of Finance. Let's branch out and talk about investing around the world. Jason Hsu joins us from Rayliant Global Advisors on the line. He's also the chief economist at East West Bank. I believe an active teacher as well. Jason, thanks for being here.
Glad to be here, Oliver.
What are you most excited about right now? Because you guys have a suite of funds, mostly with an international bias. And I'm thinking today with NVIDIA as my own bias. How does that impact the rest of the world? Can you give me a quick thought on that one?
Well, when you think about NVIDIA and in the frothy market that we're in right now, it sort of harkens back to, let's say, Cisco during the tech bubble, right? And when you look at the projection they had at the time, they were not wrong about all the hardware that needs to be bought and deployed. What they were wrong about was it was not all Cisco. So as I'm looking at the AI revolution, I think we're grossly underestimating the value that can be created, but we're also grossly overestimating how much of that value is going to be captured by, say, the NVIDIA and the companies that you see today. And I say a lot of international companies are competing directly with NVIDIA and may have cheaper and better solutions as we deployed hardware worldwide. So think of emerging Asia as the prime location for hardware.
It's amazing that despite our leadership on that front and an incredible run in NVIDIA and others, that generally, if you go by indexes, you would be better off this year still investing abroad than in the US. How long does that trend maintain, and where does it come from if we are leading the front? Is it a story about perhaps a margin sort of arbitrage on what they're getting for what they're spending on their analogous products?
Well, Oliver, to give you a little data, kind of post the 2000 internet bubble and the correction, there was a 10-year period where emerging Asia outperformed the US by about 9 percentage points per year. And so that's kind of the data I want everyone to focus in on, because it's been a long time since we've seen any kind of emerging market, international market outperformance versus the US. But right at the front end of the internet revolution, I would say it's going to repeat right at the front end of the AI revolution. You're going to see massive hardware redeployment, right? We're going to have to reroute the entire infrastructure. We're going to have to change all the data center, all the cloud centers. And hardware has always been Asia's game. So I expect the same thing to occur again. And this isn't that US is going to lose its leadership in terms of innovation. I think once all the hardware is deployed, of course, all the software application, the business model innovation is going to take over, much as Google and Amazon did. But I would say the front end of it, it's going to be a lot of the hardware makers, and they're the most mature, most efficient in Asia.
When you talk with the investors of your products, when you're selling your funds and you're thinking about an institutional, larger advisor audience, how much of this is about giving an alternative to their traditional 60-40? It seems like so much of the asset manager conversations today I have are geared around bringing in either alternatives or uncorrelated assets that won't get swept up if you get a sort of inflation-driven pressure like 22. Is this part of that solution?
Absolutely. So, Oliver, I was talking about it from a tactical perspective, but I would say emerging markets, international markets, they're not a trade, right? They are a core part of your portfolio as a great diversifier. I mean, this year, you're absolutely right. Emerging markets, last year, emerging markets and international markets actually outperformed the US. So we've been living in a wonderful bull market, which has gotten quite expensive. But what we're forgetting is there are cheaper markets elsewhere also experiencing a bull market on the back of AI. And so if you're going to ride the AI wave, right, it may make sense for you to ride other parts of the markets that are less correlated to the US, that are cheaper than the US.
Which then gives you something to, kind of hang your hat on if things do have that correlated downside here. Jason, kind of thinking also about the business model too. The last point is we're thinking a lot about advisors here on the show. Yesterday we had Bob Boros from Hightower on. Was talking about their NEPC deal, which is really about bringing OCIO into their model. How has that opened up the door for more kind of bespoke solutions and alternatives that might include an emerging market fund?
Yeah, absolutely. If you look at all the models that advisors have used, and you can't blame them, right? They have used something that's very US-centric, very 60-40, and that's done really, really well. It's done so well, you almost go, why do I need anything else? Right? Why would I ever need stocks outside of the US? Right? Why would I ever need something more complicated than 60-40? But precisely, your point, the index is so concentrated, and it's concentrating the best performers that are the most expensive. And even then, it's underperforming some of the diversifier assets, right? And so I think the concept of diversification, the concept that if you're going to buy an exposure to AI, it's not just opportunities in the US, there are opportunities everywhere else. Some are cheaper. So I really think the international model as a model component for advisors is something advisors really want to look into, right? It's, you got the 60-40, you got tax issues, so you don't want to rebalance out of that. What makes sense is to look for models that are much more international, emerging market focused as a good complement to the US focused models that you already have and have a huge embedded gain in.
You got competition, Jason, from all these funds that are gearing towards like the anti-authoritarian. We had another one on last week too. They kind of seem to be eating into some of the international trade. Just real quick.
Well, when you're diversifying into international, right, you can throw on some ESG, to screen out countries don't like, right? But I would say from research, governance is important. You absolutely want to care about governance, but it's less about kind of the political structure as it is about do they have good regulators, right? Do they have good rule of law, right? If there's good shareholder protection and there are consequences to sort of bad governance, you're going to do well. Like, so focus on countries that have demonstrated, nothing is going to be U.S. quality, right? So that's not pretend, right? Like we can find U.S. or better than U.S. quality type of governance, but there's going to be some, basic good housekeeping quality that you're looking for, and that's going to be important. That's why you got to be a lot more active in emerging markets because governance matters. It matters a lot.
And hopefully our house doesn't get too dirty because I keep hearing that our own scores have gone down on that front.
Our score is abysmal now.
Right? It's getting worse. Jason, let's continue the conversation. Appreciate you being here.
Absolutely.
Great stuff. Jason Asu at Rayliant Global Advisors. Ray E, the Emerging Market Fund, by the way, host of them. When we come back, let's talk banking regulations. Let's talk about the disrupting potential of stable coins, a little crypto sidetrack when we come back. Welcome back to Chicago, Future of Finance. We're really going to live up to the title here and talk about the disruptive potential in the banking world via stable coins, getting out of some of the intraday action to talk about what could come for crypto in the institutional financial world. Joining me is Bart Smith from Performance Trust, head of risk and regulatory insights, but also a kind of legend in the regulatory space. You were a 25-year veteran of the FDIC.
That's right.
Bart, thanks for being here.
Yeah, my pleasure.
Tell us about your experience and also your kind of firstly, before we get into the stablecoin stuff, which I know you're excited about and so am I,
Right.
from the perch at Performance Trust, local institution here, a community bank-driven institution. Is there something in TradFi that is interesting to you, or is this all about thinking about the digital future?
Well, there's always interesting things in TradFi. And at the moment, though, we're kind of in a sleepy state. Actually, over the last quarter, net interest margins were up, earnings are up, everything seems to be fairly stable. Everybody thinks a CRE crisis is on the horizon. It's not happening.
They've been saying that for a while.
They've been saying it for a while. It just continues to roll around. And then we've got this sleepy stablecoin, which truly is a massive threat to the industry. kind of people discovering in the moment. So I think we're in a stable environment from traditional finance. Generally, performance is a little lower than it has been historically, but a decent environment for banks to feel good about.
I'm interested in this conversation because I'm a bit of a crypto cynic still, but
okay.
mostly when it comes to sort of the pure speculative nature of some of these things and if they are what people say.
Yeah.
When it comes to stable coins, I think your perspective is interesting because you're not a crypto person pumping a crypto concept.
No.
You're more someone coming from the perspective of looking at a financial institution and defending your moat and wanting to stay ahead of it.
That's exactly right. There's two camps in the stablecoin world. One is this is cross-country payments. This doesn't have anything to do with traditional finance. I'm not concerned about it. The other side is the crypto enthusiast, right? To them, this is the end of banking as we know it. I think we sit somewhere in the middle. And I think what banks need to think about is really, hey, where does this impact me? How does this impact me? Is it something that's real? I think it is real. Personally, I think it is a threat. I think it could be a threat if not dealt with appropriately. And we'll see how it goes. And you got to remember, in the United States, we don't have a couple banks. JP Morgan, Bank of America, Citibank, they're all going to be fine. We've got 8,000 banks and credit unions that are less than 10 billion in assets, community type organizations. This is a serious issue that they are going to have to contend with over the coming months.
Does that mean, is that a scale thing where if you don't have the massive scale of the biggest money centers that you have to make sure you stay more nimble?
Right. Well, JP Morgan has been exploring this for years. They're coming out with the JPM coin. Bank of America is looking into it. They have the money and infrastructure to go at this full board, take on any kind of new entrance into the system. Smaller community banks are just finding out about this. They certainly don't have the infrastructure to take it on independently. So they're now trying to figure out, hey, how is this potentially going to impact me? And what can I do to kind of stave it off going forward?
Has the Genius Act kind of pushed this forward? How does that timing relate to your experience as a regulator for 2.5 decades?
Yes.
What kind of brought this to you? Was the Genius Act saying, okay, now you have to kind of think about this? Or were those wheels starting to turn and you saw them turning from your perch before?
Well, for me, no. If you'd go 12 months ago, all the crypto banks were being shut down. Crypto was a dirty word, and it was associated with Bitcoin and kind of those central cryptocurrencies we're familiar with. Stablecoin's an entirely different thing. It's a payment process. It's a different kind of payment process because it's a different rail, and it's a better rail. And so there's opportunity there, particularly for consumers and everybody who might engage in this activity. But it is a different environment, and banks do have things that threaten because of it.
If you think about some of the main verticals of profitability for banks, in particular fees and those rails, which are the ones most vulnerable to disruption?
Well, no doubt, payment rails and payment income, non-interest income that banks receive is on the table. There's no way in the world that is going to remain high. It's going to go down. That's where their biggest immediate vulnerability is. But the bigger vulnerability is what happens to deposits, particularly in the Genius Act loopholes. There's an ability to potentially pay interest on deposits at bank hold that they don't pay interest on. So you start creating that competitive setting, and you start having deposits move out of the banking system into these other, kind of financial vehicles. That is a huge problem that banks need to deal with. So on one hand, you do have the fee income. On the other hand, you have deposit disintermediation, which is huge. At a minimum, it's going to increase deposit costs in some respect.
As we think about disruption, one of the other themes is AI. I consulted the AI. I want to see what your thought is on what our AI told us. Let's look at it real quick.
Okay.
The question was public adoption of stablecoins more likely to create friction or opportunity for America's biggest banks.
Yep.
And the ICTV AI said stablecoins create friction only if banks defend the old checking account and interchange models. They create opportunity if banks reframe them as programmable deposits, balance sheet efficiency tools, and data-rich trust anchors. The edge isn't in crypto hype, and you kind of mentioned that. It's in who controls the rails. So does each bank have to build a new rail? What's your reaction to that?
No, you build the currency and you put it on a rail. And I think in reality, the technology is going to shift where a guy's got money in a checking account If he wants to pay somebody with a stable coin, he immediately buys it. It moves to the person he's trying to pay. It's very seamless and transparent for that end consumer perspective. But at the moment, there's not an incentive for you and I to engage in stable coins. We can go on Amazon and purchase anything with our existing credit cards. We don't care. But the merchants and the vendors, those who benefit from lower exchange fees, are going to be pushing this. And that's where I think we get this convergence. And so
you see it's coming from the vendors and the merchants first, which is a very interesting point.
Well, they're the ones who are going to benefit from it, right? If I'm a grocer with a 3% margin, and I can double my margin with getting rid of interchange fees, there's a huge incentive for me to get my customers to use that. So I think in the coming years, I don't think it's months, but in a year, a couple of years down the road, technology is going to catch up. And the merchants are going to push it. Walmart and Amazon, are sitting there thinking about issuing their own coin. Why are they doing that? Because there's so much benefit from it. So I think over time, banks have to react to that. I think they can in providing the payment rails, and I think they'll be competitive in that. The larger banks on their own, the smaller banks with, service providers. But the question comes down to the deposit structure. Can they hold the deposits? And our interest rate's going to go. A Clarity Act comes out. It's going to come out in not too distant future. And with Clarity Act, everything is tokenized. Everything is digital. So the movement and transfer of assets and liabilities is a lot different than it is today. When that happens with the technology around it, now you have a system that is very, very competitive to what has been kind of glued in traditional banking.
It sounds, there's a lot, unfortunately, this is a conversation that's going to go further than the time that we have, but it sounds like when you frame it that way, especially when I come from the merchant and the vendor side, if they can make transactions cheaper and they can make profits better, then that means in theory, they could also reduce prices to some extent, which means higher volume of spending, everybody wins. Is this effectively a stimulative act if realized the way you envision it? Is this an economic macro stimulus if it works out?
I don't know that it's a macro stimulus. It's certainly something that changes the way people pay for activities. In some ways, it could be a macro destimulus because if deposits flow out, you don't get the money supply multiple that you get from banks lending money. And so that's where I think there's a problematic position with this as we extend it down the road from a broader economic perspective. But you're right. We're unpacking a lot of things.
That was kind of going up. The last part then that's a little bit more imminent from the perception is when the number one stable coin is Tether, and you have still guys like Zeke Fox, who are some of one of the best journalists I know, wrote a whole book basically questioning what their deposits are equal to. Could you have something like that turn out to be a big sham and everything you just said still applies because banks can do it themselves?
Internationally, you could have a sham. You can continue to have that. Tether is currently not bound by the Genius Act. But if I'm a stablecoin issuer bound by the Genius Act and I operate in construction with the regulatory environment, then I should be in pretty good shape. And that's where I think the world gravitates to an infrastructure like the Genius Act that guarantees payment of the coin that you issue.
And those guarantees the Genius Act requires, it's got to have, treasury backed, it's got to have, to some extent, liquid.
93 days is the maximum maturity. It's got to be treasuries or cash. It's actually, if you've got a large deposit, is actually more stable than potentially an insured deposit in a bank.
Fascinating. That's my kind of crypto guy. That's a fun conversation, Bart.
But there is opportunities for banks, and I think banks need to get serious about the strategies they're undertaking, about the futures that they have, and about operating at optimal levels. Banks right now are operating at suboptimal levels. All banks across the board have to think about how to get to an optimal level of performance.
In theory, if you do something from a defensive standpoint, it can also be an advantage for you as an edge competitively if you do it right.
At a minimum, you need to take a defensive stance. At a maximum, you need to rethink your entire business model and how you've been operating over the last few years, where are your vulnerabilities and how you might change going forward.
Great stuff. Bart, pleasure to meet you.
Yeah,
really
nice to meet you. Thank you.
Yeah, super interesting angle. Guess the most sold I've been on a crypto conversation. Bart Smith, Performance Trust. All right, let's talk some of the speculative stuff, though. We got Risk Radar. We got Scott Bauer joining me. The bell is ringing. Here's where I left things yesterday. There's Scott where we left him with the beautiful Colorado view. Let's look at that Risk Radar real quick here so we got something to talk about. The dollar staying kind of firm today. The Bitcoin trade, though, firming up. Dollar actually slipped a little bit there in the last few moments. Scott, generally a risk on day. If you look NASDAQ, if you look at S&P, if you look at Bitcoin. But does all that change tonight?
It absolutely does. You know, Oliver, I'm sure you've talked about this before, but I can't remember in my 35 years professionally of doing this where one stock, and yes, we've had big stocks before, but one stock has earnings that makes up almost 8% of the S&P 500, over 14% of the NASDAQ. And then if you look overall at the S&P, 35% of the companies that are in the S&P 500 are related to AI. So I cannot remember one single stock in my tenure here that can have such an impact. So if NVIDIA's guidance, and that's going to be the big thing, it's not going to be, top line, bottom line so much. If the guidance is poor, then that is going to really take off that risk on trade.
Looking at the potential for vol to crush if it goes well, or vol to spike if it goes poorly, where are your guardrails? Where is your idea, Scott, on kind of the range, the variance potential here for the next 24 hours?
Yeah, so the option market was pricing in but between a $13 and $14 move to the end of this week. So between 7-8%. 170, which is just above that expected move on the downside, that's the 50-day moving average. Real critical level there. On the upside, there's nothing up there, no man's land. So, are we going to move beyond that expected move of $13, $14 on the upside? I would highly doubt it, even if the results are good, guidance is good. There's definitely room here, to look at 190. I know a lot of people are going to be looking at 200 just because it's a nice big round number. I'm really more focused though on any sort of pullback, which I want to buy on a pullback. 170 is my target area.
I'm looking at the chart right now. If we can take my chart here from Trader Oasis, 170. I mean, you'd feel like people would be running in at 170 if we get down there, given that this has been, we gapped up there in July in the summer.
Yeah, there's no question. That's a really big volume area. That's been a very popular area, if you will, for both buyers and sellers. And it's now the 50-day moving average. So that is going to, if there is a sell-off, we're going to see a lot of volume in on at that level. I don't know that we're going to get down there. I have no idea. If we do, though, I think you're right. You're going to see a lot of people piling in.
Yeah, that would be a nice juicy move, bigger than the expected move. Right now at like 5%, which is not too extreme. I mean, we did have that big red candle August 19th, but otherwise I feel like the expected move seems kind of fair based on how this has been trading.
Yeah, I personally don't have a position on NVIDIA going into earnings. Okay. I have plenty of others. However, if I was going to put on a position, it would be a short premium position, like maybe selling an iron condor, selling an outside strangle, maybe buying something against that. I would be short some premium, but that's because, like you, I don't think we're going to move out of that range. Could be wrong, don't know, but that's what the option markets are there for.
Looking at SMH, it's had a little bit of more momentum to the upside here. Kind of, if it breaks down, maybe a head and shoulders. You could see the head, you could potentially see a shoulders if it breaks down, but I'm not too worried about this yet, Scott. I feel that to doubt the AI trade is it's been a losing trade. Now, look, I know that these things, juicy bubbles and growth bubbles, even if they're based in very real things, they can pop, but it's just, I want to see the proof in the pudding first. I want to see technical breakdown, and the SMH, I would argue, even looks better than NVIDIA.
I agree with that. And I don't think we can discount the AI trade at all. I think what we will start seeing happening, whether it's this next quarter into 2026, is the AI trade may consolidate. So some of the companies that are on the fringe that are making up, that 35% of the S&P 500, some of those may start going by the wayside, because we see this as certain sectors mature over time. What happens is many of the startups, many of the high-flying growth stocks at the beginning, they kind of lose their luster and they maybe get taken out by some of the big guys. So the AI trade is definitely not over, but I can see it consolidating.
You mentioned some of the other stuff you got right now, Scott. Tell me what is juicy for you. Tell me what's exciting trade-wise, if not putting on this specific earnings move.
I think Palantir was a real good entry today down at that 157, 158 level. Tried to get it yesterday. It ran, missed it, got it today. So I really like that. Earlier today in CrowdStrike, who's reporting now as well. That's one that I did sell premium. I did sell an iron condor, which means I sold a put spread on the downside. I sold a call spread on the upside that expires this Friday, just in 2 days, looking to really harvest that expensive premium. So CrowdStrike's another one where I am looking for a move, but not a move greater than what the market is expecting.
I didn't realize CrowdStrike was getting cooked as much as it was. I guess the idea that maybe it can find some support here, but directionally, your trade's not strongly biased, is it?
No, it's a little bit biased to the upside with the strikes that I used, but really the trade I have on 402.5 on the downside and like 455-ish on the upside, that is where my break evens would be come Friday, anywhere in the middle of that range. So basically, $52, $53 range, I'm going to make money on that trade.
Okay. You mentioned Palantir. I want to go back there just for a sec because that one also seemed like it was a screaming buy at 155. But you now have a pretty big candle today that's not, it doesn't engulf yesterday's, but this is clearly still a pretty two-way fight.
Oh, there's no doubt about it. There's a lot of pessimism out there for some of these stocks, and they're going to move, based on what NVIDIA says. Even though they're maybe not 100% correlated, these stocks are going to move on NVIDIA's guidance. And if, the guidance is somewhat rosy, that's going to be a good thing. That may not be a great thing, at least initially for NVIDIA, because in the past, they've blown away expectations, given great guidance, and the stock has sold off a little bit after earnings and then recovered. So NVIDIA, that could be the expectation. But some of these other stocks here that have gotten beaten up, the candles maybe don't look good, and maybe there's a little bias on the downside right now. But listen, there's these opportunities that people will say, we wait for, right? If the market pulls back, or if a certain stock pulls back to a certain area, okay, that's my pivot point. And many times when that happens, if we do see those pullbacks, traders, retail, whomever it is, they may say, oh no, it's going down lower, so I'm not going to get in here. I am not really a believer of that. I have my areas there, and so that's why I'm holding to them.
Love it. We'll see what happens tonight. Should be a fun one. Loving that closing bell hit. Thanks, Scott. Thanks, Coach. Appreciate it. Prosper Trading Academy. Thank you for tuning in at Chicago Future of Finance. It was a fun show. I'll see you same time tomorrow, 2 p.m., 1 hour into the bell. Have a great night.